Hi, and thanks so much for coming back to my channel. This is a market update for real estate. And surprise, surprise, Zillow says that home sales will be the lowest in 30 years in 2024. So let's dive into other things that Zillow might say, Redfin, some of the numbers, the mortgage bankers, as well as other information that is very pertinent to what is going on in the market. And will Zillow be right? That is one to watch. So let's dive into the housing market update. Here is the report from Zillow, who changed its tune recently. The pending sales posted the biggest decline in 4 months, dampened by rising mortgage rates. Now, previous, they had talked about that there was not going to be a decline necessarily, and that sales might plummet. However, that's really not happening. So that is not what we're expecting. So if you look here, the bumpy start to 2024 housing market continues, with daily average mortgage rates posting their biggest one-day increases in over a year on February 2nd. And the jump came after a hotter than expected January jobs report and the Fed's confirmation that they're unlikely to cut interest rates in the next 2 months, which means mortgage rates will probably remain elevated near their current levels for at least that long. Now, if you read the tea leaves and in between the Fed speak versus the Fed meeting, you can kind of almost sense that it's going to be a May or June reduction. The other thing that's really important from this report is that the median U.S. sales prices rose 5.4% year over year during the 4 weeks ending February 4th. And that's the biggest increase in over a year. That is really hot news. So I definitely want you guys to pay attention to that, because we are definitely tracking and really think that that's very, very important. So definitely these numbers here, if you can go ahead and track that and pay attention to those numbers. It's very, very important for you as a consumer to pay attention to that information. Some house hunters are at least getting a feel for the market. Redfin's Home Buyer Demand Index, a seasonally adjusted measurement of requests for tours and other buying services from Redfin agents, has steadily risen since mid-January, and a second measure of home tours shows that they've increased 16% since the start of the year. And, that is definitely something to pay attention to. It's definitely something we're paying attention to. So, not that we're super excited about it. We're going to pop over here to the it's the Mortgage News Daily Rate Index. I just pulled this. But this is not good news. So the 30-year fixed rate went up 0.01%, to 6.98. A 5/1 ARM is 6.55. A 15-year fix is 6.33. And the 30-year jumbo is 7.30. Now, if any of you were in the real estate market a couple of years ago, the jumbo loan rates were way better than the 30-year conventional fixed rates. So it's really, really interesting how these tables have turned. So as we really look at this, it's just interesting. There is no crystal ball. We can't necessarily predict what's happening. If we look down here to the graph, you can see in 2016, these low rates, 2020 through 2022, incredibly low rates. And as they've climbed, that's what has caused this real estate slowdown. Yet showings are still up. So they just surged in January. So it's been a really, really interesting market, and we're all, as agents, paying attention to it. Here is the interesting mortgage application increases from the Mortgage Bankers Association. These are also very, very interesting numbers. We'll go ahead and put those together for you, but it's very, very good data for you to also be able to pay attention to, because if the applications increased, then that means that there is a little bit of strength in the market as far as the buyers. So the Market Composite Index, a measure of the mortgage loan application volume, increased 3.7% on a seasonally adjusted basis from 1 week earlier. And the seasonally adjusted purchase index decreased 1% from 1 week earlier. Here's the big news, in quotes: mortgage rates have stayed close to where they started the year despite swings in treasury yields because of slowing inflation, offset by stronger than expected readings on the job market. Again, this report is also reflecting back to that jobs market. Then if you look here, rates at these levels have not prompted much of a reaction in the refinance market, as most homeowners have mortgages with much lower rates, tons of equity. Why would they refinance? Purchase activity has been strong to start 2024 compared to the final quarter of 2023. However, activity is still weaker than a year ago because of low housing supply. Now, is that good news or bad news? It depends on who you are. It's bad news if you're a buyer and you want to buy a home, because it's really important that the rates go down so that you have an affordability. And we'll talk about what affordability looks like. And then again, this is that Redfin report. And what we want to do is go back to the leading indicators of home buying demand. And it's very important to look at the daily average 30-year fixed mortgage. That is 6.92, the value. And the recent change, it's up from 6.75, and the year over year up from 6.39. And that's from Mortgage News Daily. And then if you go to the 30-year fixed mortgage rate, instead of the daily average, it's 6.63, nearly the lowest level since May, and then up from 609 though. So that's the Freddie Mac. And then the Mortgage Bankers Association, the mortgage purchase applications are down 1% from a week earlier. And so they're in total down for that period 19%, which is humongous. That means those lenders are really hurting it. So if you get a lot of lender calls, that's why. Because, the Redfin home buying demand is up slightly from a week earlier, but down 7% from a month earlier as of the week ending February 4th. So it's down a total of 14%, meaning that people just aren't touring homes as much. And the Google searches for home sales are down 2%. At the end of February 3rd, down 16%. That's from Google Trends. And then touring activity is up 16% from the start of the year. But at this time last year, it was up 10% from the start of 2023. So that's from Showingtime. Why that's interesting is that we're getting showings, but we're not getting more purchases. So we find that that's very interesting. And then let's look at the Showingtime Index. Showingtime Index, you can see December, the West region. This is all in the West. This is the West information. So I didn't pull anything from the whole nation. This is just the West. So the index remains steady at 85.6. This was a year-over-year increase of 1.5%. So that measures the showing traffic per residential property for sale by agents and brokers utilizing Showingtime solutions for property access management. And so a higher number means that an average home receives more buyer visits on a given month, and an index value is scaled relative. November it was 85.6, December 84, and the percentage change is up 1.5%. Then if we look at this historic trend, here's all the states in the West, that 85.6. And then the nationwide, the Showingtime showing index is 121.6. So it's much higher in the nation. So I hope that really, helps you see kind of those fixed rates, and then what Zillow and Redfin and the Mortgage Bankers Association and the lenders are saying about the real estate market at current. The overall market is still steady as she goes. Not as many showings, not as many buyers, not as many pendings. We are still selling real estate, and we still have a shortage of inventory in Boise. Hey, thanks so much for tuning in for this market update. If you want more information about the market, don't hesitate to give us a call or email us. We're happy to discuss it, especially if you have a particular area in Idaho that you're interested. Also, be safe, be happy, and be home in Idaho. Bye-bye.